Welcome back to Financial Accounting and Reporting. It's your instructor, Ms. Maria Angelica Sibalatukan. For today, we will be dealing with understanding credit terms. So as a quick recap, we already know in our basic accounting class that a merchandising business is one that is engaged in trading or in the buying and selling of products. So the merchandising companies that purchase and sell directly to the consumers are called as the retailers, and the companies that sell to these retailers are called as wholesalers. Now let's go to the credit terms. So a credit term indicates when payment is due for sales made on account. So it contains the discount period, and the credit period, as well as the trade discounts and the shipping terms. So here we have the example of a credit term. We have here 20, 15, 5, 10, and then 30, FOB destination, and freight collect. So how do we read this one? So before we proceed to that, let us go first to the parts of this credit term. So we have we have the 20, 15, in some cases this is 20%, 15%, or this would be 20-15. So these are the variations. These two items are both trade discounts. So a trade discount is used to encourage buyers to purchase products because of the markdowns from the list price. So the list price is the catalog price. So that's what is being recorded in the catalog of the store. So the trade discount is a reduction in price of the product sold, but this reduction is not recorded in the books of accounts. So the trade discount, when deducted from the list price, you will get the invoice price. So again, this is just to encourage the buyers or induce the buyers to buy in bulk or buy in large volume of purchases. Okay, so in this example, we have two trade discounts. 20 is the first trade discount and 15 is the second trade discount. So for example, if the list price is 100, so how do we get the trade discount? So the trade discount is 20% of 100. So 20% of 100 is 20. That's the first trade discount. And how do we get the second trade discount? So that would be 15% of the remaining amount after you deduct the first trade discount. So let's go back. The first trade discount is 20. So 100 minus 20 is 80. So 15% of 80 would be our second trade discount. So therefore, that would be 80 times 15%. That would be 12. Okay, so in total, our trade discounts are 20 and 12. Next, we have number 3 is our cash discount rate. So the cash discounts, these are offered to encourage prompt payments from the customers. So this cash discount is an incentive for the buyer if the buyer pays within the discount period. This time, this type of discount is recorded in the books of accounts. So on the side of the buyer, that's a purchase discount, and on the side of the seller, that's a sales discount. Next, we have number 4. So this one, the denominator, that is our cash discount period. So this is the length of time in terms of days or months within which the buyer should pay if he wants to avail discount. So, for example, if the buyer wants to get a 5% discount, then he should pay within 10 days. Okay, so if this is 20, then he should pay within 20 days. Then number 5 is our credit period. That's the period of time given by the seller within which the account will be paid in full by the buyer. So if the buyer does not pay within 10 days, as indicated here in our example, he should pay within maximum of 30 days after the date of purchase. In number 6, we have the shipping terms. So for this one, this is FOB, destination, freight collect. In some other cases, this could be a FOB shipping point or a freight prepaid. So FOB is free on board, and then destination means that the ownership of the goods transfers to the buyer only upon the arrival on the destination. If it is an FOB shipping point, so the title of the goods passes from the seller to the buyer upon shipment. If it is freight collect, it means that the freight charges will be paid by the buyer upon collection. If it is freight prepaid, it means that the seller already prepaid or paid in advance the freight. So these are some examples of how credit terms are expressed. So for example, we have N over EOM. So it means that the net amount must be paid at the end of the month. So that is the EOM, end of the month. If it is N over 10 EOM, it means that the net amount must be paid within 10 days after the end of the month. Okay, so let's go back to the first two examples. So what is the end of the month? For example, this month, our month this time is September. So our end of the month is September 30. So if it is N over EOM, regardless if we bought the item on September 1, September 3, September 20, September 15, or even September 29, we should pay the amount, the whole amount, and deducted with the discounts, if any, within the end of the month. But since this is NEOM only, so it did not indicate the discount or the discount rate, so therefore we have to pay in full the entire amount less any returns on September 30, because that is the end of the current month. If it is N over 10 EOM, therefore that's 10 days after the end of the month, we have to pay in full 10 days after the end of the month for this month. So again, our end of the month is September 30. So 10 days after that is October 10. So if it's N over 10 EOM and we're in the month of September, so the total amount should be paid on October 10. Then we have 1 over 10, comma, N over 30. So that means 1% discount is granted based on the invoice price if paid within 10 days from the date of purchase. Net amount must be paid within 30 days. So the as if numerator here is our discount rate, cash discount rate, and this is the discount period. Then you have the second one, 1 over 5 EOM and 40. Now this time this 40. So there's a 1% discount granted based on the invoice price if paid within 5 days after the end of the month. So let's go back to our previous example on the end of the month. So again, our end of the month for September is September 30. So 5 days after September 30 is October 5. So you will get a 1% discount if you pay until 5 days after September 30, or that would be October 5. Okay? So regardless, again, if you bought that today or on September 25, September 26, September 29, September 30, or even October 1, 2, 3, 4 until 5, you will still get 1% discount as long as it falls until it falls within or until up to October 5, which is 5 days after the end of the month. So therefore, on October 6, there's no more discount. However, you have to pay the entire amount within 40 days. Then we have second one, the next one is 2 over EOM and 30. So that's a 2% discount if the invoice price is paid until the end of the month. So our discount period here is the EOM. So that's 2 over EOM. You get 2% discount if you pay at the end of this month. So that's September 30. Then next we have a two discount rates. We have 5 over 10 and you have 2 over 15 and over 25. That's a 5% discount if paid within 10 days, or it could be a 2% discount if paid within 15 days, and then net amount must be paid within 25 days. So what does this mean? So do I get 2 discounts or I get only 1? So the answer is it depends on when you are able to pay in full. So if you paid within 10 days, you'll get 5. But if you paid within the 11th until the 15th day, so you only get 2%. It's not that you will get both 5 and 2%. So it depends only which discount period you're able to pay the amount. So if it's day 1 to day 10, that's 5%. But if it's day 11 until 15, that's only 2%. And then net amount must be paid within 25 days. So that's all for today. I hope you have learned something. See you in our next video.